Let's go. So, good evening, everybody. Thank you all for coming tonight. Right, we had a good time in the afternoon, and we initially the plan was to be able to combine one. We did initially the plan was for us to be able to combine everything into one particular class, right? So, because me, I don't even like when when a video is um when a video is too much. You understand all of those things. I love it when it's very short and precise. All right, but we sometimes, we have to make it long. We have to, reason why it's going to be long, like so many videos, is because there are people who we don't learn at the same pace. There are people who you have to explain the same thing over and over and over again before they can understand. But there are some, the moment you explain it once, they will really just catch up with it. They already understand it even more better than the person who explained. And there are some that you need to um still keep explaining until they get it. You understand, right? So we spoke about understanding the storyline, being able to build storyline from the daily. We made reference of the daily, so we just want to reiterate. And part of the things I'm going to reiterate is that as much as you want to figure out your bias, your entry, one of the things you want to pay attention to is your exit, meaning that if you build a bias from the daily time frame, right, the ideal place you want to see price run to is going to be another daily key level. So price moves from one daily key level to another daily key level. Price moves from one 4 hour key level to another 4 hour key level, right? But another thing we said was that part of the things I said was that if this is the daily time frame, for example, right, we have this as the daily time frame. So we have on the 4 hours. If you see what we have on the 4 hours, let's say the 4 hours gives to us a breakout, right? I said after the breakout on the 4 hours, this breakout on the 4 hours on the 1 hour time frame is going to be a liquidity sweep and a breakout structure, right? All this is just to show you that 4 hours and 1 hour are in sync with the daily time frame. So the first condition we want to see on the daily, I'm reiterating right now, is that the daily must actually reject from a daily key level, close below. We jump one time frame lower. We want to see the 4 hours give to us a breakout. And I made mention of it that the breakout is different from breakout structure, right? So 4 hours will give to us a breakout. The moment 4 hours breaks out, we move one time frame lower. This breakout you see on the 4 hours is going to be a liquidity sweep and a breakout structure, right? And I told us that if price trades from one daily key level to the next daily key level, right? For the fact that price traded from this daily key level here and traded into another daily key level, either a V shape or an open close, and it traded into it, reacted, and it closed above. It is not enough reason for you to start looking for buying opportunities. If you move to the lower time frame, right, after this daily rejection and candle close above, if you move to the lower time frame, like 30 minutes, 15 minutes, you are going to see buying opportunities. But that buying opportunities, there's every possibility it's going to fail because after we see a daily rejection from a daily key level, we will have to go one time frame lower to ensure that the 4 hours and the 1 hour are in sync with what we have on the daily. So if we see that on the daily we had a rejection, price closed below, 4 hours gave to us a breakout, the 1 hour gave to us a liquidity sweep and a breakout structure, right? And price trades to another key level. The moment we get to this particular key level and price trades into it, rejects, closes above, the next thing you want to see is that if you don't have a 4 hour break after this rejection, like if you don't have a proper 4 hour breakout, either a breakout or a breakout structure, it means that this rejection might just lead to a little bit of retracement to a particular key level that is being created, and the other flow is just going to continue to sell until we have a breakout structure or a breakout to the opposite direction. They would know, right? And I also stated some things, right? Danfodio asked the question. He asked that if we trade, right, this I'm reiterating very fast because of those that were not on the call this afternoon or this morning, right? So I told us that if daily trades into a particular key level, right? So let's say we traded from daily here, price traded from daily into a particular daily key level, right? Now, I told us, he asked the question, if we have two consecutive down candles like this, right? Two consecutive down candles, then price trades into this particular key level and it gives to us an engulfing, right? Let's say, now, Danfodio asked the question that can we use this engulfing, right? We had two consecutive down candles create an open close, and then it engulfs. Can we use this engulfing to as a change in directional bias? Right? I said no, right? Which means that if you have if you see the market trade from a daily key level into another daily key level, right? And I told you that if it trades from one key level on the daily to the next key level on the daily, and it reacts from there and it closes above it, right? If you see you move one time frame lower, and on the 4 hours time frame, if you do not see a liquidity sweep and break, and you do not see a breakout, if what you are seeing on the daily, right, on this new level the price has traded into is that two consecutive 4 hour candles traded to the downside and created an open close, then it's engulfed. This is not a reason for you to change directional bias. It doesn't mean the price will now start to buy. No, I said that we can use it for retracement, meaning that price might come back to this open close that got disrespected. Price will use it as a retracement, trade into a particular daily key level, then it will continue its directional bias to the downside, right? We cannot use engulfing with an open close break to change direction. We can only use it for what? We can use it for retracement, because for us to be able to see that, okay, the trend has changed from a bearish order flow to a bullish order flow. The same thing, the same condition we saw here that led to all of these sales is the same condition we must see here that will lead to all of these buys. What are those conditions? Daily rejecting daily, reacting and closing below. What are the conditions? Daily rejecting daily, reacting from the key level and closing above. We move one time frame lower, looking for two things. We are either looking for a liquidity sweep and a break, or we are looking for a breakout, right? Liquidity sweep or a break or a breakout. If we get a breakout on the 4 hours, this breakout on the 4 hours, on the 1 hour time frame, the breakout you see on the 4 hours is a what? Liquidity sweep and a break of structure. Do you understand? Now, that means that your 4 hours, your 1 hour are all in sync with your daily time frame, right? So for those of you that did not attend the class, I've summarized, but you will still watch the video. So I want you to be able to catch up. So now we've been able to speak about storyline. So now let's say we have started a storyline from the daily, right? Price has started a storyline from the daily. There's something we call the origin of a particular setup. Then we speak about from origin to continuation and other types of setup that you might want to consider as well, right? So you would know. I would also state some things as we go in passing as well, right? So you will see, I want you to have it at the back of your mind that everything that the market seeks to do is just two things, right? The market is looking to rebalance old imbalances and also to, the market is looking to rebalance an old imbalance. Let me attend to this guy. Just give me a minute. Okay, so let's continue. So Dixon asked the question, valid one. Sorry, sir, what if there is no sweep and break or breakout on the H4, but it is clear on the H1? Can it still be considered valid, right? So now the beautiful thing about how we trade is how we are able to come up with context, right? We just want to have a few contexts, right? So that can give us, good trades, right? So if you have been following and watching most of the videos, in fact, the three things I said we want to see, right, to ensure that your 4 hours and your 1 hour are in sync with your daily, is that the 4 hours can give to us a liquidity sweep and a break. The 4 hours can give to us a breakout. And I also said the 4 hours can also give to us an engulfing. How many of us remember this third one, this engulfing that I spoke about, right? And there were certain conditions I made. There are certain things I said. If you go back to previous videos about every time price gives to you an engulfing, right? We can always wait for a confirmation, right? And all of those things, right? So can we consider it? So if we don't see a break of structure, or so if there's no sweep and a break on the 4 hours, or a breakout on the 1 hour on the 4 hours, but it is clear on the 1 hour, can it still be considered valid? Yes, it can be considered valid on certain conditions. We want to see what the 4 hours is doing, right? We want to see what 4 hours is doing. So let's say, for example, let's put it in this context. If you have daily reject from a daily key level, right, and you remove one time frame lower on the 4 hours, and we see that the 4 hours has not given us a sweep and a break, or the 4 hours has not given to us a breakout, right? The moment we have not seen all of those things, but we see that on the 1 hour, we can see a liquidity sweep and a breakout structure, or we can see a breakout on the 1 hour, right? So now the beautiful thing we have to pay attention to is 4 hours. We want to see where exactly is the 4 hours reacting from at the moment, right? Let's say daily is reacting from a daily key level and it is looking like it's going to close below, or maybe it has closed below. Then the previous day we have the 4 hours and we can see the 4 hours reacting from a key level, right? Giving us bearish signs, right? So as much as we can see it on the 4 hours, like we can see a break or a sweep and a break, we can pay attention to where the 4 hours is. I'm sorry, we can pay attention to where the 4 hours is currently rejecting from, right? So if the 4 hours is rejecting from a V-shaped key level or an A-shaped key level, right? If it is rejecting from an A-shaped key level and it has not given to us a break, if it has not given to us a break of structure or a breakout, and we can see that it's clearly rejecting from a 4 hour key level, we can now move one time frame lower to the 1 hour, right? If it is clear on the 1 hour, right, we can now see that, okay, 1 hour has a sweep and a break, or 1 hour is given to us a breakout. So the context behind this is that daily is rejecting from a daily key level, but 4 hours is not showing to us what we want to see, or it is clear on the 1 hour. If it is clear on the 1 hour, we have to still give attention to the 4 hours, meaning that now 4 hours, we want to pay attention to where exactly on the 4 hours is price rejecting from. Is price rejecting from a 4 hour V-shape, open close, or whatever it is, right? And if you see that 4 hour as it's rejecting and it's looking like it's going to close below, and we move one time frame lower and we can see all of this on the 1 hour, then it makes a lot of sense. It becomes valid. Do you understand? So that is what makes it become valid. So if, for example, for entries, part of the things we spoke about is that one of the type of entries we are going to see liquidity sweep and breakout structures, right? The moment you have a liquidity sweep and breakout structure, I made emphasis on something. I said the moment you see price sweep liquidity and break structure, right? You want to pay attention to all that has happened to the left-hand side. So let's say, for example, this is a QMR. This is a QMM. This is an A-shaped key level, which is people call it the QMR, right? This is also an A-shaped key level that we want to consider. So this is where flexibility, being able to trust what you know, right? This is where you begin to build experience, solid experience. So let's say, for example, the origin of the entire setup, we have this QM. This is an A-shaped key level that got disrespected twice with an impulsive move, right? Because if you pay attention to what I want to tell you now, this is an A-shaped key level. The moment it got broken with an impulsive move, it's supposed to be used again, for buying opportunities. But it got broken again. The moment it gets broken again, right, definitely we are going to use it to continue to sell. So the context behind it is that this same key level still remains fresh, right? Because it still remains fresh, or let's use the word usable, because it was disrespected twice. The first time it was disrespected, we should have used it for a buy, but the second time it got disrespected, meaning that we now use it for a sell. And the last context you can add to it why we should use for a sell is that now price has also broken structure. So we have a break of structure. So the moment you have this type of key levels, right, your origin of the setup can actually start from here, right? Price will tap into this QM key level and price will continue to move to the downside, right? So there are times that when you see a sweep and a break, you are expecting many a times, you're expecting price to come to a deep retracement, right? And you now ultimately find out that many a times price is not going to come to the deep retracement. The beautiful thing about this QM is that, which is where we now begin to have the origin of the setup, is that many a times you're going to see price create for you like an inducement liquidity, right? Trade a little bit lower. Then you will find out that this QMR key level, which is an A-shaped key level that got disrespected twice, right, is going to be overlapping inside of an imbalance, right? So you see that price would actually just tap it, right? And we'll begin to see a heavy drop. Then there are also times, that there will not be an imbalance to be rebalanced, right? There are also times that there will not be an imbalance to be rebalanced. price will just create an inducement liquidity, trade to the downside, come for the extreme of the entire setup, which is the A-shaped key level, and price will just continue to move to the downside. So you see that this QMR key level doesn't really have anything much to do, right? It doesn't really hold. The reason is because price swept liquidity broke structure, then the QMR key level is not overlapping, maybe inside of an imbalance, so it makes it a little bit less low probability. So you see that at the beginning, the origin of the setup, right? After price comes to take out internal range liquidity, right? After price takes out internal range liquidity, it will come for the extreme, which is the A-shaped key level. And the next thing you're going to see is that price is going to break below this external range liquidity, right? So you see price has satisfied two conditions. It has satisfied one condition here. It swept liquidity, then it came back to play this particular A-shaped key level. Then the next thing price did was to break this. This is where the continuation setup comes in, right? Price is now going to break this external range liquidity. So you see this concept of liquidity, you see price came from internal range to external range. So the beautiful thing about the continuation setup is that you will see that after price broke this external range liquidity, right? We want to see this external range liquidity broken with an impulsive move to the downside. We want to see it get disrespected with an impulsive move to the downside. The next thing we are going to be able to see is that we want to see that the next candle that is going to trade after this impulsive move that is being created, the next candle that is going to trade is going to create for us. That is what is going to create that imbalance, right? You will see that the next candle that is going to trade here will create for us that imbalance. So what we are going to most likely see is that number one, this V-shaped key level that was disrespected with an impulsive move to the downside. Now we have an imbalance that has been created. We also have an internal range liquidity. So you see at the beginning here, price satisfied only one condition. It swept liquidity, came to the extreme of the key level and dropped. Then the continuation setup comes up. This is the setup. I said this like maybe 2 months ago, maybe in June. I randomly said it. I don't know if many of us will remember in June, late June. I told us that this continuation setup has over a 70% win rate, right? If you study it and master it, right? So I said this. So you see that price will come, take out internal range liquidity, play out from that same key level that got disrespected, and you see that price will continue to move to the downside. There are also many times that after price has satisfied this condition, don't forget I said this candle that traded above is going to create for us an imbalance where this key level is going to be overlapping. Now this key level, this V-shaped key level that is being created is the continuation setup. This is where the continuation setup sets in. This is the origin, right? This is the origin of the setup. Price took out internal range liquidity, came to the extreme, right? Came to the extreme. And I told us times where price might not come to the extreme. If you have a QMR key level that has been disrespected twice, and when you mark that key level out, that QMR key level, when you see that it is overlapping inside of an imbalance, there's every possibility that price will not come to the extreme. Price is most likely going to play the QMR key level and drop, right? Because it now makes you understand that the market just has two major responsibilities: to attack liquidity, to rebalance and hold imbalance. At what specific pricing level? The specific pricing level now becomes the QMR, which is the A-shaped key level that got disrespected twice, that is also overlapping inside this imbalance, right? So, but when you see that the QMR is not so clear, right? Maybe it's looking so rough, there's no imbalance or anything, there's always a possibility that price will just come for this extreme, which is the A-shaped key level. Then if you missed out on this origin of the entire setup, you will see that most likely price is going to break for the continuation setup. We want to see price break below a key level with an impulsive move. We want to see price break below a key level with an impulsive move. Then we want to see that the next candles that are going to trade close to it, right? Well, the next candles that are going to trade close to it will create for us an imbalance. The reason why we want to see an imbalance is that we always want to see our key level overlapping inside of an imbalance. Then the market will now satisfy the two major conditions we want to always see: attack liquidity, rebalance the imbalance that has been created. At what specific pricing level? At what specific pricing level? You will see that the specific pricing level now becomes the V shape that got disrespected. So what are other types of setups now you can now begin to see, right? So another type, you get the same continuation can happen here. It can also happen here again, right? What I mean is that it can happen twice in a particular trading day, in a particular trading cycle day, that 24-hour cycle, meaning that price might just come. In fact, there are times that the second one itself, the first one might create an internal range liquidity, like an inducement, right? then come to take play the continuation that is overlapping inside of this imbalance. The second one might not even create for you like what we call that inducement like this. Then tap it, continue to drop. The second one might not do that. The second one might just come, tap into that key level that is overlapping inside of that imbalance and drop. I think many people took that. Many people saw what happened in gold, right? Gold today. I think that was what happened in gold today. Price just uh price just went straight to the key level that is overlapping inside of the imbalance, right? And just started to drop. So the moment, one of the things I emphasized today, right? The moment you have context in trading, one of the things I emphasized today is if you're finding it difficult, okay, beautiful. If you're fine, please turn off your videos or it will affect the network bandwidth. I don't know. I think is the person sleeping? I think, okay, I switched it off on my own. So one of the things I emphasized today is that if you are finding it difficult to build bias from the daily and you're finding it difficult to build bias from the weekly time frame, one of the things you can actually do for yourself is that you can focus on 4-hour breakout. 4-hour breakout. Look for the most recent 4-hour breakout. The moment price breaks below a low, an external range liquidity on the 4 hours, just know that we are still bearish, right? If if you have a breakout to the upside, know that we are bullish. Then what the most ideal thing for you to do is that you now want to begin to look for selling opportunities in that direction. But it is still good just to build bias. I've made it easy already, right? When you go through the videos that we had today, the class we had today, you understand what I'm talking about, right? So the continuation setup, there are many ways you can actually find the continuation setup, right? There are many ways you can find the continuation setup. So there are times that 4 hours, sometimes you would just see maybe something like this. Let me show you something like this. When you do personal studies, you just find a lot of things, and that is where the experience comes in from, right? So we have about 8 minutes more, but so sometimes you will see on the 4 hours, price can tap into a particular key level on the 4 hours. Yeah, so we know we are going from 4 hours to 4 hours, right? A 4-hour A-shaped key level, we are coming to a 4-hour V-shaped key level, right? So 4 hour taps into a 4 hours, closes below after rejecting, right? You will see that on the 1 hour time frame, 1 hour can give to you a breakout like this. It can give to you a breakout like this. You will see what I'm trying to show to you. I want to show you something about this continuation setup. Something very beautiful. So you will see that 4 hours with tap into the 4-hour key level, A shape, react and close below. Then you see 1 hour give to you something like this. A very sharp move to the downside. So what you will see is that 1 hour will give to you a breakout. So you see that breakout now becomes an A-shaped key level that got disrespected, right? It becomes a V-shaped key level that got disrespected, right? You will see that many a times 1 hour will just come back to this particular A-shaped key level that got disrespected, trade straight up to the next 4-hour key level before it now starts to reject, maybe before it begins to go to the opposite direction, right? Before it begins to go to the opposite direction. Do you understand what I'm saying? So another type of setup I want to, when it comes to the continuation setup, the one I even recommend everybody masters and trade is every key level that is overlapping with. I'm telling you, I can't say it's, I can't even say it to the public channel, even when we host market commentaries. I won't say it, but I'm telling you, if you are here, one setup you should master, right, is the continuation setup. It's not hard. It's the continuation setup. I'm not saying you cannot master the origin, but you see this continuation setup, a key level that got disrespected with an impulsive move to the downside that is also overlapping inside of an imbalance. If that is the only thing you are looking for, you won't have issues. You won't have issues. I'm not saying you won't take losses. You will take losses. But when you have a cumulative of all the trades you have taken in a month, you will come out on the winning side. Because now your trading has more context. And when your trading has more context, you will take fewer trades. Because the moment you cannot even see your own setup you are looking for, right? The moment you can see your setup you are looking for, there's no point pulling the trigger. The reason why many of you are even still taking unnecessary losses is because you just want to trade every day. When you 4 hours is not clear. 1 hour is not clear. Every sweep and break you see, you just want to play the nearest key level. You just keep taking unnecessary losses. But the moment you have context to trading, even if people are selling, you will tell yourself that until I see this thing, this is what I want to see. A 4 hour breakout, 1 hour key level overlapping with an imbalance. That is what I want to see. You will see that at the end of the day, the cumulative results you are going to get, you will come out on the winning side. Do you understand? So there are other continuation setups, right? So we have the origin, we have the continuation. Continuation can be like this. There are also times that let me add this also as well. So there are also times like this that even price takes out external range, right? It takes out internal range liquidity, takes out external, right? So we know that now on the 1 hour time frame, we have a breakout. So we have the origin of the setup, we have the second one, the continuation. Let me add I hope we are learning, Sha. I hope we are learning. I hope we are learning. So, so this is the origin of the entire setup, right? This is the continuation. So another type of continuation setup you're going to see is what I want to show you now, where you have an impulsive move to the downside that takes out external range liquidity, right? Then you have two consecutive candles to the downside. So the two consecutive candles, the first one actually takes out the external range liquidity. The second one trades to the downside, right? Those two consecutive candles now create for us what we call an open close key level. This is another type of continuation setup, right? So now these two consecutive candles to the downside, the first one you're going to see is that the first candle out of the two consecutive candles, the first one is going to take out this external range liquidity, right? It's going to break it below it, right? It's going to break below it, right? And these two consecutive candles now are going to create what we call internal range. It's going to create for us what we call open close key level. Now, the thing we want to always see is that the next candle that is going to trade close to the open close, right? Many a times, 70 to 80% of the time, we don't want to see this next candle trade into it. We don't want to see it trade into it. We want to see it trade close to it. What I mean is that we want to see this 1 hour candle. Let's say this is, we want to take another continuation. We want to see this 1 hour candle trade very close to this open close. Why? The reason is because this 1 hour candle is going to serve as an internal range liquidity, right? It has to satisfy, the market must have to satisfy a particular condition. So you will see that these two consecutive candles to the downside will create an open close key level. The next candle that is going to trade close to it, we don't want to see it tap into it. We want to see it trade close to it, right? The next candle that must trade close to it will serve as internal range liquidity. So what we are going to see is that we're going to see something like this. Price will take it out, take out the liquidity, play out from the key level, and we'll have a continuation to the downside. Now, let me tell you something about it. If you study if you just take time to study about key levels, you will find out that this open close that you find on the 1 hour time frame, I want to say it now, the open close that you find on the 1 hour time frame, if you move to the 4 hours, it is a V-shaped key level. It's an A-shaped key level. An A-shaped key level on the 4 hours is an open close on the 1 hour. An A-shaped key level on the 1 hour is an open close on the 30 minutes. Go and do the studies, you will see it. Just take your time and do some studies. You will see it. We have about 1 minute and a few seconds left. Should we call it a night? Are you learning? I just want to know if okay, somebody has a question. You know what we're going to do? Should we call it a night, or we should send another link? We have a few seconds left. Mass. Okay, so we have another link. So okay, so let me send another link. Yeah. So Dixon has already answered the question. Inducement for origin. Yeah. Yeah. So I'll show you guys something. So let me end this call so that I can start converting, because we have about 7 videos to share tonight already. So let me end this one now so I can start converting.